Yo guys, welcome back to another video. This is FFX. Yo, the boy probably recorded this for like a millionth time. I don't know what's up with this PC today, but yeah. Today I'm gonna be teaching you or showing you how to identify high probability ways in which you can identify buyers using BuySide and SellSide liquidity on higher time frame, extra liquidity. In other words, we are using swing trading models and day trading models to identify key reversal or key target areas and zones in which price tends to react and target. And we call this next draw on liquidity. So when price reacts from one level, it's targeting another level. In other words, price is only doing two things: targeting imbalances or insufficiencies. No, it's targeting imbalances which are in forms of gaps or sell stops and buy stops, right? So in this case, we'll be utilizing sell stops and buy stops, which are in forms of liquidity, buy side and sell side liquidity, right? And this begins on the daily time frame. So the first thing we do, right, is we identify the most influential, the most recent high or low in which price is potentially targeting, or price just hit and we expect a form of reaction, right? So if you pay attention right here, we have our low, which is set as the daily time frame sell side liquidity low, right? It's a clear low. Price hits it. So within this zone right here, we tend to expect a form of reversal pushing bullish, right? A form of a rebalance, if that makes any sense, right? To push bullish or change of structure, right? And for us to confirm our bullish bias, right? Because this is basically a form of bias, right? How we said bias. And our next strong liquidity is basically another word of bias, right? So as soon as price violates sell side like this, yeah, on lower time frame within the zone, sell side zone right here, and current time frame, right, we look to the left to identify and see if there's any PDRAs that may confirm this low as a influential low that might drive price higher. That makes any sense, right? So now going from the daily time frame straight to the 4-hour time frame. This is still the same daily low, right? Most recent low. If you pay attention to our left right here, we have an order block, a 4-hour order block, which may be used as some form of support to push price higher, if that makes any sense. I'm just gonna be using retail forms to make it easier for some people to actually understand, right? But yeah, it's basically behaving as some form of a support structure with sell side right here to push price bullish, right? So right now, for us to have a clear direction or clear bias that price is moving bullish, right, we are looking for some form of a change or reaction within this zone right here that supports bullish structure, right? Now going into the 1-hour time frame, still the current sell side right here, daily time frame sell side. If you pay, as soon as what we wait for is price to break this low right here, the lowest low, sell side liquidity. It can even break it by a pip. I still personally regard it as valid. As soon as that happens, we wait for price to break a recent high, the most recent short-term high, which would be right here. And this is called change of character, right? If price closes above the most recent short-term high, right, we regard that zone as change of character. and we expect price to push bearish to target some form of an insufficiency to move bullish, right? Supporting our statement would be this breaker block right here. If you pay attention, price does not close below it, so it's regarded as some form of support to have price push bullish again, right? So what is our target, right? What is our next draw on liquidity? Where are we expecting price to go from, right? From this low, moving bullish, right? It's very easy to set up or select highs that are not visited, right? But a more systematic way and high probability way in which price tends to target, right? In other words, price is always, I repeat, always looking to target the specific highs, right? Change of character within this range right here, this bearish correction, in other words, right? We set our dividers to the past 3 days, if that makes any sense. Looking like this. As soon as this change of character indicating that we are bullish, right? We set our dividers to only utilize data from the past 3 days, if that makes any sense. And we're expecting price to rebalance and target the past 3 days daily high, which would be day 1 high, which would be right here. Day 2 high would be right here. Day 3 high would be right here, right? And if you pay attention, this is how we are utilizing it or expecting it to move, right? We have a displacement, break of the lows, head of insufficiency right here, which is busy, buy side imbalance, sell side insufficient, right? Displacement or change of character, moving bullish, right? And then we're expecting price to draw towards each one of this buy side right here, right? Okay, personally, when I'm approaching the markets like this, right, I'm not even referencing any highs that are not within this 3-day range, right? For price will always tend to remark or revisit or have influence based on the previous 3-day range, if that makes any sense, right? And then this is potentially how we're expecting price to draw to, right? And one note that we use to get the most high probability zones or areas in which we could take our buy trades or bullish trades, right, is that we take the 3-day high and the most recent low from our displacement zone, which would be here to here, right? We divide this range in half to get our equilibrium. Equilibrium is the center point, the 50% range from the 3-day high and the most recent low, which is right here just after SellSide liquidity was violated, right? And anything below the equilibrium is regarded as discount. Anything above is premium. In premium zones, we look for shorts, sells. In discounts, we look for longs, buys, right? There's other ways to maneuver taking longs in premium zones, but that we only tend to do that when our overall bias is in sync with higher time frame. And when I say higher time frame, is the daily time frame and weekly time frame. If there's any forms of insufficiencies, which are in forms of gaps in which price could target above this buy stops right here, then price may be driven to violate all of these highs, right? So within this range right here, our highest probability long setups are within the equilibrium and below, right? But when we are within the premium, right, and we still set to target the daily, day 3 buy side, right, we divide our premium in half. From the equilibrium, we divide our premium in half, and anything below the premium equilibrium would be discount, right? Premium, discount. where we still take our longs, if that makes any sense. But both setups that are given within this 2-day range right here, and we can tell that this is a 2-day range when we utilize the power of 3 profile, right? In other words, this is our 2-day range, right? This is day 1, day 2, 6 July, 7 July 2023. Midnight open is right here, and midnight open is right here. Each one of these days, when we have our bullish bias, right, we are expecting price to, from the open of each one of this 2-day range, right? So from the open, this blue line right here, midnight 00 New York time, right? So set your trading view or whatever platform you trade to New York time, right? We expect price to create some form of accumulation, manipulation, distribution. And our accumulation tends to be our Asian range, central bank stimulus range. There's a video that has been posted that I released about that, but I'll be sure to provide a link in the description so that you can get full details on that, right? So when price opens within both the midnight ranges, when we have a bullish bias in check, right, we tend to expect the power of 3, and that's when price opens from midnight, it draws bearish, it goes down to target some forms of sell stops or insufficiencies, only to push bullish. In other words, it should be something like this, right? Price opens right here, it dips and then pushes bullish, right? Price opens right here, it dips, it targets this order block right here. If you pay attention, violates this low right here, which is pretty much the same as the higher time frame profile that we are utilizing to take longs, right? I would also regard this as the same profile because the daily open went bearish from the open, which violated the Asian low, which is this candlestick right here. But for you to see that, you'd have to go into the 15 time frame. I'm just able to identify this personally on the 1 hour because our Asian range is from 8 p.m. to midnight New York time. Same here. So this is our accumulation phase. But everything that's within this, how to execute trades here, I've provided videos on how to approach markets utilizing power of 3 and Asian session ranges. So the link will be in the description explaining how we use that and how to approach the markets when you have that. When you have this bias in check mixed with the power of 3 setup, right? And I hope everybody found this video helpful. The boy has been off for a minute. I'm currently not even at home. So hope everybody's safe. Hope everybody's having a lit day, and stay tuned for another video.